So here it says, according to FINRA, it says investors of color are entering the market at a pace faster than white investors, and they tend to be much younger. This is just huge. This is absolutely epic. This is a very big deal, and basically what it's kind of saying is that we're now doing exactly what I've always said. We're taking the lead. We're not trying to just close a gap. We're actually creating a better gap. A better gap is a gap where we're actually winning. The real racial wealth gap is going to be the one where everyone else is trying to catch up with us. And it says the FINRA Education or Investor Education Foundation. Sorry, that's what it stands for. Anyway, they've released a new report, Investors of Color in the United States. The report examines the behavior and attitudes of investors of color based on data from FINRA's Foundation's National Financial Capability Study, coupled with a series of focus groups conducted with young Black African Americans, Hispanic, Latino, and Asian Pacific Islanders. The report shows that investors of color are entering the market at a pace faster than white investors. New investors, particularly Black African American and Hispanic Latino. I'll let them have the props. Even though every person from Latin America is not Black, or not a minority, or not a person of color. Just so you know that they have white people that speak Spanish too. Like you go down to Colombia, they got the white side of town in Medellin and the Black side of town. Let's just be clear about that. It says here the report shows that investors of color are entering the market faster than white investors. We already said that. Quote, with a large number of young investors entering the markets, financial education leaders will need to adapt, including providing relatable and trustworthy resources on channels these new investors use, said FINRA Foundation President Gary Walsh. While conducting this research, we learned from investors of color about barriers they or their families faced previously in building wealth through investing. Seeing an influx of new investors of color is encouraging and highlights the importance of our markets becoming more accessible. Key findings: investors of color are entering the market at a faster pace than white investors. Since 2015, the percentage of new investors has increased for all three groups: 9 percentage points for Black African Americans, 7 percentage points for for Asian Pacific Islander, and 6 percentage points for Hispanic and Latino. Investors of color tend to be younger. This is particularly noticeable among Black African American and Hispanic Latino investors, not voters. You're voting for yourself. You're voting for your money. Motivations for investing: non-white investors, particularly Black African American and Hispanic Latino investors, are more likely than white investors to be motivated by reasons beyond long-term profit, including short-term gains, a desire to learn more about investing, entertainment, and excitement because their peers are doing it. So basically, what this references is that there's sort of a cultural sort of thing that's connected to this, and I wanted to address that. There's actually research on this topic, and I want to kind of mention some of this research to you. So we have a lot of investors that are investing, but unfortunately, if you're not careful, you may think you're investing, but you're actually gambling. You think you're securing your future, but actually you're adding risk to your future if you're not careful. And one of the things that is out there in terms of studies is that when you're talking about young Black investors entering into the market, there is kind of an issue in terms of risk. A lot of times Black households they're less likely to own stock, and they're more likely to rely on very high risk or informal investment channels. This is according to the Federal Reserve's Survey of Household Economics and Decision Making. And so basically, one of the things that they mention is that a lot of people are investing because it's hip and it's cool and it's exciting, and they want the quick flips. I'm not saying that the quick flips can't happen. They can happen, but the quick flips typically don't happen as often as the long-term wealth building process. So for example, in the $5 a day plan that we laid out, it's one of those things that's guaranteed pretty much based on history to build a substantial amount of generational wealth. Whereas I know a lot of people who use things like stock options for day trading, and their wealth isn't really going up. Their excitement level's going up. They feel like they're participating in the investment world, and that's a good thing. But there should also be a long-term component. There should be something that isn't going to just let you have fun while you're young. It's going to make sure you're good when you get old, if you get what I'm saying.